Yo, what's going on, guys? My name is Vince and welcome back to the channel. Now, if this is your first time here, I post on this channel once a week talking about stock trading and options trading, showing you guys my trades every single week, as well as tips and tricks for investing into your future. So if you like money like I do and you want to learn a little bit more about the stock market, go ahead and subscribe to the channel. Now, if you guys came back to see how I trade this week, unfortunately, I do not have any trades to show you. This Monday, I moved all of my money out of Robinhood into TD Ameritrade, and of course, that takes a few days for the money to clear. Now, the reason I did this was because I was sick and tired of the BS that was going on in the Robinhood app with it crashing all the time. I wanted to make sure that I was not taking any unnecessary risks now that the account is a little bit larger and I'm taking some larger positions. That was not a risk that I was willing to take. So rather than going over trades today, we're gonna go over the fundamental and the technical factors that you should be considering to answer the question of whether the stock market has found a bottom. Now, in today's video, I'll share with you guys my thoughts and my recommendations, but remember that everything I say in this video is for entertainment purposes only. My goal with today's video is to show you guys some of the key levels in the charts, as well as go over some of the news that's been occurring in the market, so you guys can approach next week and take full advantage of the volatility in the market. All right, guys, it's Friday night. I don't want to waste any of your time. I pulled up the charts. Let's go ahead, dive into the technicals and find some key levels that we need to watch into next week. So looking into the charts, what we're looking at here is the S&P 500 ETF. Now, the reason I'm using this is the S&P 500 is a good general trend for the market, and the ETF trades extended hours, so we don't have any big jumps in the chart, which makes it a cleaner analysis for you guys. So looking at the chart, this is the daily chart over the last 5 years. This is 2016, 2015 is right over here, 2017, 2018, and 2019, right? So if we move this over a little bit, what we're looking at is the last 5 years. Now, obviously you can see these two outliers right here, the 2018 fall in late December, and then you can see, what's been going on right now, which is the coronavirus, right? So the first thing that I want to do is I want to draw a general trend line over the last 5 years. So if we go from the bottom of here in 2015 to this low here, and then through this recent trend, we can see that we're still on a general uptrend, and we're sort of playing with some support levels over here right now in the market. So let's move this over a little bit to give ourselves some space. But what we can see is that yesterday we actually broke through that trend, but today we bounced right back and found some support there. So the question is, on Monday, do we stay above this support line or do we fall through it again? Now, the next thing that we want to look at is, instead of a trend line, do we retest this support here? So if we draw a price line here, that's about 234 on the S&P 500 on the SPY. So drawing that price line there, we haven't reached that yet. So you may say, okay, we'll break the trend line, but do we go down to this support in late 2018? So that's the next level to watch. That 233, that 234 level is what I'll be watching if we see some more downturn here in the market. Now, the next thing that I'm looking at on this long term, which I found pretty interesting, was I pulled up a Fibonacci retracement. And what a Fibonacci retracement does is it basically gives you guys, from the bottom of the bottom in the chart that you're looking at to the peak of the top, it'll show you how much the stock has retraced. So I'll pull that up. Right here is the Fibonacci retracement. So if we take from the bottom, which is around 181, and we pull up to the peak of 339, you guys can see these three levels here, right? So this is the 38.2, the 50%, and the 61.8. So what this means is, from here to here, it's retraced 38.2% of this move, not total, but from here to here, this is 38% down of a retracement. This is 50% down of a retracement, and this is 61.8% down of a retracement. Now, if you're familiar with Fibonacci's, you'll know that you're missing a bunch of levels, and that's because I only pull up the golden zone. And the golden zone is the three, retracements that usually find support in. So right here, we have the golden zone for the S&P 500 ETF from 2015 to right now. So what you can see is it's pretty interesting. Right on the 50 level, we'll find some support areas in the past. So right around here, we can see some support in the market. Right here, again, we'll find some support in the market. And so, we did find some temporary support in the market here again. So we fell through this 50 and we bounced right back into it today. So that's something to watch. Do we stay above this 50 retracement, or do we get down to the 61.8? So you can see that back in 2018, we did break through the 61.8, but we ultimately found a good amount of support there at the 61.8. So I'm thinking right now, if Monday's green and we just go on a general uptrend from here on and have a V-shaped recovery, then we ended up finding some support at these previous levels, as well as the 50% Fibonacci retracement. If we don't hold this support and we continue down on this long-term trend, I think the next level we need to watch is the 61.8, which is around 240, 242, around that area generally. All right, guys, so we saw the trend on a more long-term view, a 5-year daily chart. Now I want to dive into the last 360 days on a 4-hour chart. So sort of zooming in and seeing if we can find any support and resistance levels there. So looking at it here, same thing, SPY over the last 365 days on a 4-hour chart. Now the first thing I want to point out is right here we have the 2018 fall that we saw in the recent chart, and here is where we're at right now. So the first thing I want to point out is this support level here and this support level here. So if we look at that, we found support on the first downturn at around 290. Now this makes sense when you look left on the chart. You can see that we also were finding support at the 290 level in the past. So if we draw a price line around here, that makes sense that we found some support there and we bounced up. Now what we can see is that after that 290 we jumped to 310, but we found some resistance and ultimately fell. Now that makes sense because if you look left on the chart, you can see that in the past we did find some support there, and previous support turns into resistance. So that would make sense that we found some there and we ultimately failed. Now the next thing that you'd want to be looking at this, if you're looking at the technicals, is to see if the previous support of 290 ultimately held for this next downturn, and see if we can find some support there and turn more into an upward trend. But what we can see is that the stock fell straight through that and went straight down to $270 a share. Now we can see that at 270 we bounced and retested this previous support level. Now usually previous support turns into resistance, and when we went ahead and tried to rebound into that 290 price point, we failed again and started to downturn once again. So this has been sort of stair-stepping, as you can see, over the last few days, over the last few weeks. So if we zoom in, we can really see that stair-stepping. We went down, found support, failed at the previous support, fell again, tried to rebound back into this support here, and ultimately failed once again. Now what we can see is right now, as we go into the weekend, we're basically at that same point that we were right here, as well as right here, and ultimately it failed. Now, I'll go ahead and highlight that so it makes it a little bit more obvious. So there, and once again, right here. Now, what's to be questioned is, do we find resistance once again at this level where there was previous support, and fall lower? And the next thing we'd want to see is if we fall lower next week, do we break this 240? Now, if we break that 240, we're going to go down into that last 2018 low, I believe. That's at least my thought. So if we zoom out on this, what makes this support level at 240 a little bit more stronger than some of these previous ones, which is quite interesting. If we go back, we got to get back into this 2018 area. So going back here, what we see is at this 240 level, we found support back in 2018. And this is when we had that V-shaped recovery, a pretty quick recovery. So yes, we did dive through that for probably a day or two, but we shot straight back into it, meaning that there was buyers during this dip past 240. So we were at that exact same level today, almost to the dollar amount, right? So we're at the 240 and we bounced pretty strong. Now, if history repeats itself, 240 is a pretty strong support level on the S&P, and we tested it today. So I think what we want to look at into next week is, does this 240 hold? Maybe we bounce around a little bit. Maybe there's some less volatility. that would be very bullish for the market. What we don't want to happen is a sharp fall back to 240 and a break past the 240 level. That would be, pretty detrimental to the market and would basically prove that there's some more downside to be had. So let's go ahead, watch this 240 level into next week and make sure that we find some support there for a longer uptrend. All right, guys, so we went over the technicals, but remember that technicals are not everything when looking at the market. Now, when we're in really volatile times like now, sometimes technicals just do not work and our levels just fall right through it. So I want to go over 3 more things that you need to consider when looking at the market. Now, the first one is going to be the Fed. So the Fed has recently been pumping over $1 trillion into our market for it to find some stability. Now, what you need to think about is, is that good for the market and how much more ammo does the Fed have? So as you guys may or may not know, the interest rates, the Fed fund rate is close to 0%, which is the lowest in history. We're almost approaching negative interest rates. So really, the Fed does not have a whole lot left in the barrel to help out the economy. Now, if we were sitting around 4 or 5%, obviously the Fed could continue to cut rates and continue to help the economy and the market. But at this point, we're so close that the Fed really doesn't have much left. So you need to consider that, again, when you're investing in the market and sort of see what the Fed's actions and how it's going to affect the market ultimately. So the next piece of fundamental news that you want to keep up to date with is the oil war that's going on right now. So a couple weeks ago, the Saudi prince went to Russia and said they need to cut supply because he's not seeing as much demand in the market. He wants the rates to come back up for oil. Russia did not obey that and said that they would not cut, their production. So what the Saudi prince went ahead and did is he just made millions and millions of more barrels, said that they were going to make a ton more oil. And what that did was flooded the market with oil and brought the prices down. Now, to make matters even worse, the demand for oil is falling at the same time. So in America, at least, there's less planes flying. There's less people driving cars because of the coronavirus. So we have a flood of supply and we have less demand, and that is causing oil to absolutely tank. Now, the third thing to consider if you want to try to answer if the stock market has hit a bottom is the psychology of traders and just Americans in general. So as you guys know, coronavirus, every day we learn a little bit more about it. We see more developments going on and more innovation, but we also see more people getting infected and more people dying. So every day we'll learn a little bit more about the virus, which may make investors a little bit more confident about the long-term outcome of this whole situation. So really just consider where we are with the virus. So where are we today versus a week ago? Have we made any improvements? Is it just getting worse? So I think this week, this prior week, we definitely got worse. There was more cases, more people, getting sick. And that's why there was no support and no trust in the market as we just continued to see worse and worse news about the coronavirus. Now, what we want to see into next week, do we find, some type of not cure, but sort of progress towards a cure? Or do we have more tests that are going out so we know who has the coronavirus? Where are we going, and are we making any progress with this virus? And I think that psychology will really help the markets find some stability and hopefully find, some type of way to uptrend. All right, guys, so we went over the technicals, we went over the fundamentals, and we talked a little bit about the psychology of the American consumer and the traders right now. I hope this helped you guys get a little bit more knowledge of what's going on in the market, as well as some of the key levels that we have to watch in the market next week. This will hopefully help you make some educated decisions as you trade and put your own money on the line. So if you guys enjoyed the video, found some value, go ahead and smash that like button and subscribe to the channel. Next week, I'll have my money ready to go in my TD Ameritrade account, hopefully make some successful trades, and be here next week to show you guys the results. If you found this video helpful, again, smash the like button, and I hope to see you in the next one. Peace.